What's up, you certified beauties? It's Nick here from Nick's Taxes, and today we're going to be talking about digital currencies and cryptocurrencies, aka your bitcoins of the world. But unlike the typical YouTube videos you've probably been watching lately about Bitcoin, I'm not going to be talking about using Bitcoin as an investment. I'm going to be talking about the tax side of these cryptocurrencies from a Canadian perspective. So if you're looking for investment advice, whether to buy or sell Bitcoin or what I think about Bitcoin, this is not the video for you. I'm going to be talking about what it means from a tax perspective to own Bitcoin or to use Bitcoin in your daily life or business life. Now, if you are investing in Bitcoin, I definitely encourage you to make sure you do your due diligence. I personally don't invest in things that I don't know fully. I like to know the business. I like to know how the business runs and put my trust in that when it comes to investing. I don't like to blindly put my investments into something that I don't know. I consider that more of a gamble than an investment. So if you are investing in cryptocurrencies, I just encourage you to do your due diligence and make sure you understand how they work and not just take a shot in the dark because people on the internet are talking about Bitcoin. Now, digital currencies and cryptocurrencies, they've been around for a while, but they've really gained a lot of popularity, especially in the last month or so, as they've been recently getting more and more value because people are starting to trade them more. One Bitcoin in Canada right now is selling at around $37,000, and like just a week ago, it was worth about $51,000. So Bitcoin has really gained in value, and as a result, people are really talking about it right now. With the market uncertainty, it seems like people are shifting towards these cryptocurrencies, and some think that it's the currency of the future, and there will no longer be different cashes and different currencies on a country-to-country basis, and they'll start using these digital currencies. As a result of these popular cryptocurrencies, different tax agencies such as the CRA have come out and made statements on how these things need to be taxed or reported on our tax returns. It's not something that we see every day, and when the Tax Act was originally written, there was no such thing as cryptocurrencies. So it's only in the last few years that the CRA has come out with these tax rules. And so today we're going to take a look at what that means for you. Now, before we get any further, if you're new to the channel, please consider subscribing. I make videos on personal tax, finance, and investing. So please give a thumbs up and a subscription, hit that bell notification. Also, I'm on Instagram and Twitter at Nick's Taxes. Be sure to follow along there. So as a little background, digital currencies are not produced by any country, nor are they considered legal tender in any country. So as a result of their use in online exchanges, they allow for a little bit more of an anonymous transaction, and that makes it very difficult to be tracked. And so you can gain your digital currencies in one of three ways. One of them is through mining. You may have heard that phrase before. It's a process which you use computers and algorithms to like find new coins, new like Bitcoins. Second is through purchasing it and exchanging it for your traditional currency. Like for instance, one Bitcoin is worth 37,000 Canadian dollars right now. Or you can receive a Bitcoin in exchange for a service or maybe a product. Either way, like I've said, these digital currencies are difficult to track, and because of that, many cryptocurrency traders have kind of refrained from reporting that income they've earned on their taxes. And so failing to report these on their taxes is becoming a big problem in Canada and around the world. And so the CRA and other agencies are starting to crack down on these cryptocurrency traders. So in Canada, the CRA has said that trading cryptocurrency is much like trading stocks. When you buy and sell it at a gain, it's considered a capital gain. And when you buy and sell it at a loss, it's considered a capital loss. What does that mean for you? It means that 50% of the gain is taxed at your marginal rate, and also 50% of your loss can be used to deduct further income. Best example I have, if you bought $100 worth of Bitcoin, it's now worth $500. That is a $400 gain. 50% of 400 is $200, and that will be considered taxable on your tax return and taxed at your marginal rates. So $200 taxed at your marginal rate is dependent on how much other income you have reported as taxable income. The reverse happens when, say, you have $300 worth of Bitcoin and you sell it for $100, you would have a $200 loss, which means you could report a capital loss of $100 on your tax return, and that amount could be used to reduce further taxes owing. So this is what it looks like if you're just a regular investor of Bitcoin. If you are considered more of a high volume trader of these cryptocurrencies, in most cases, the CRA would consider you a business venture, and therefore you would be taxed as such. But those kind of business cryptocurrencies is beyond the scope of this video. And if you're doing that, I suggest you talk to an accountant to help you with setting up a business account. Now, if you're not trading cryptocurrencies, but using them to buy and sell goods, CRA considers that transaction to be a barter transaction, and the CRA considers barter transactions as taxable as well, and we'll talk about that in this video here. So let's say, for example, there's a daycare, and someone uses Bitcoin to pay for the daycare services. If I charge $500 a month for daycare and receive Bitcoin instead of cash, I have to report that as if it was cash of $500. Regardless if the Bitcoin goes up in value or down in value, because my service is worth $500 cash, I need to treat that as if it fulfilled my cash service of $500 and report that gain or that income at $500. On the other side, if I used Bitcoin to pay for daycare services, a daycare is considered childcare expenses, so I could apply and use $500 worth of childcare expenses on my tax return. Again, it goes to the dollar amount associated to the service that is being provided. Now, if you're a business and you use Bitcoin to buy your inventory or your products or services, you need to look at the daily exchange rate for that Bitcoin or that digital currency on the day in which you make that purchase. So for instance, if I'm a business and I go out and buy a product and I use one digital currency, let's say one Bitcoin, to purchase a product, that product is going to be considered the value of that cryptocurrency on that day. So say my cryptocurrency is worth $500 on this day that I'm purchasing this asset. That asset to me is worth $500, and for the person receiving that cryptocurrency would also be considered receiving $500 in exchange for that asset. Again, it's using the exchange rate on the day that the transaction happens. Similarly, if you're an employee who receives money in Bitcoin, you would have to report the income earned at the fair market value in which you received that Bitcoin. Regardless if the Bitcoin crashes or goes up in value, it's the date in which you receive it is how much you actually receive in income. That value there would be how much you would declare on your tax return. All right, so at the end of the day, whether you're buying or selling or trading your cryptocurrencies, by law, you're required to keep records of your trades. And if you don't keep records, you're going to need to make educational guesses on the value of these trades. It makes it so much easier and important to keep track of this for capital gain and loss purposes. If you don't have the supporting documentation required, the CRA can either overassess you or deny your losses claims, depending on if you had gains or losses. Either way, not an ideal situation. Just keep record of all the trades that you make. Ultimately, tax evasion is illegal. If you fail to thoroughly and accurately report it on your tax return, you can be assessed heavy penalties, and you could also be charged with tax evasion, which is something you definitely do not want to do. Like I've said before, the CRA is continually working on cracking down on figuring out how these digital currencies work and how they should be reported and who should be reporting these on their tax return. If you don't and you get caught, it's not a good situation, so it's best to be compliant with the CRA now. So that's all for today's video. If you got value out of it, I suggest you give it a thumbs up. I'd appreciate that a lot. And if you're new to the channel, again, consider subscribing. Let me know what you think in the comments below, and I will see you guys in the next video. Again, I'm Nick. Happy taxing.